Hello, welcome back to my YouTube channel. This is Aishwarya. We are seeing Accountancy of Class 11 under CBSE Syllabus. This is Chapter 3, Recording of Transaction, Part 5. So, in this video, we've solved numerical problems 11 to 15. Okay, now we'll see one by one. Problem number 11. Okay. So, the question here is business started with cash 75,000. Okay, so the journal entry. So we have to see what are the two accounts that will be hit here. So one is the cash account, the other one is the capital account. Now what to debit, what to credit is the question. So cash and asset is coming in. So there is an increase in asset. So cash will be debited. Okay, so the amount I will enter in the debit column. And capital account will be credited with the same amount. So the journal entry will be cash account debtor to capital account 75,000. So you will write the narration as being business started with cash. The next transaction, purchased goods for cash 10,000. Now when goods is purchased, you will always debit or credit to purchase account and not goods account. Okay, when you buy other machineries or some other asset, you can directly credit or debit that particular asset account, be it machinery or building or anything. But when it comes to goods, it is always the purchase account. So remember it. Now here it is purchase of goods, which means goods is coming in. So goods are current asset. Okay, so there is an increase in current asset, or you can say debit what comes in. So hence purchase account will be debited with the 10,000 amount. Then what is going out? Cash is going out, or the current asset cash is being decreased. So any decrease in asset has to be credited, or credit what goes out. Okay, so the narration is being goods purchased for cash. Now we'll see the next transaction. So here date I have written on the top, but in your ledger there will be one column here as date, so you can mention there. Next transaction number 3, December 9th 2017 it is happening. Goods sold to Swati 5,000. So the name of the buyer is given, which means it is a credit sales. Okay, so we will debit the debtor. So once I do a credit sale, the person who buys from me becomes a debtor. So they are liable to pay me in the future, which is my current asset. So increase in current asset, I will debit Swati account, or you can say debit the receiver. So Swati has received the goods, so we will debit Swati's account 5,000 to sales account. So sales is an income, so we will credit, since all the income has to be credited. Narration will be being goods sold to Swati on credit. Next. Happens on December 12, 2017. Purchased furniture for 3,000. Now here if you see, furniture is an asset. Okay, it's a long-term asset where you will be using a furniture for more than a year, right? So that will be debited. So increase in asset, furniture account debtor will be debited for 3,000 to cash account. So there is a decrease in cash. If the asset decreases, it has to be creditor, or you can say credit what goes out. So the entry will be furniture account data to cash account. Narration, being furniture purchased for cash. Very important to write the narration. Don't miss. If you miss, you will lose marks. Then cash received from Swati in full settlement 4,000. So remember the transaction here, Swati transaction. So we have sold her for 5,000, but here she is paying 4,000. So what happens to the balance 1,000? Okay, that is the discount we have given to Swati, maybe for various reasons, for prompt payment or early payment, anything. Okay, so here now this is a compound journal entry. So far we have seen only 2 accounts in a journal entry. Here 3 accounts are being hit. Okay, now so Swati has given cash. So cash is coming into the business. So increase in asset, we are debiting cash with whatever she has given, 4,000. Now discount allowed is an expense from the company's point of view. So any expenses has to be debited, right? So discount allowed account debtor, that will also be debited to Swati account credited, or credit the giver, or you can say the debtors has decreased. So decrease in current asset has to be credited. So I am giving you reason on both the ways. So try to analyze the account and then frame the journal entry instead of memorizing it. And end of the journal entry, make sure that both the debit and credit are equal. That is very mandatory. It should be equal. If there is a different amount here and a different amount here, then your entry is wrong. Please go back and cross check. Now, what will be the narration you will write here? Being cash received from Swati in full settlement of account, discount allowed 1000. Okay. Next. Paid rent rupees 1000. So here rent is an expense. So all the expenses has to be debited. So rent account debtor to cash account. So cash account, cash is a current asset. Any decrease in asset has to be credited, or you can say debit credit what goes out. So cash is going out. So 1000 on respective debit and credit column, and narration will be being rent paid. Okay. Next will be paid salary 1500. So same, salary is also an expense. So we will debit salary, we will credit cash, and then the narration will be being salary paid. Okay. So if you total, all your total debit and credit should be equal. So make sure that both the columns are tallying. Next we will see problem number 12. Now, problem number 12, the first transaction is happening on Jan 1st, 2017. Commence business with cash 1,75,000 and building with 1 lakh. So far we have seen usually they commence a business only with cash, but here they are bringing in building also as capital. Okay. So both are asset. Any increase in asset has to be debited. So this is current asset, this is long term asset. Okay. So we will debit cash account debtor, building account debtor with respective amount. All these are coming in the form of capital. So the total we will write it as capital to capital account 2,75,000. So being business commenced with cash and building. Next, goods purchased for cash 75,000. So again they are purchasing goods. When goods are coming in, we will debit purchase account. Increase in asset has to be debited. So goods is a current asset. So purchase account debtor 75,000 debit to cash account. So credit what goes out, or you can say decrease in asset has to be credited. So here we are paying money, right? Cash is going out. So that should be credited. So being goods purchased for cash will be your narration. Next transaction. Sold goods to Ramesh 30,000. Here again name is given. So since name is given, it's very clear that it is a credit sale. Okay. So Ramesh account debtor 30,000 to sales account 30,000. So Ramesh is a debtor. Debtor is an asset from the company's perspective. To sales, sales is an income. So that will be credited. Being goods sold to Ramesh on credit. Next, paid wages. So wages is an expense. All the expenses has to be debited. Wages account debtor to cash account. 500, 500 we will write in the respective columns being wages paid. Next, sold goods for cash 10,000. So this is a cash sales, they are very clearly mentioned. So in case of cash sales, what is coming in? Cash is coming in, or there is an increase in asset cash. So cash account will be debited to sales account. Sales is an income. So all the income has to be credited. So debit what comes in, credit all incomes and gains. So debit, credit, you will write respective amount being goods sold for cash. Next transaction, paid for trade expenses 700. So trade expenses, they are very clear, it's an again expense. All the expenses has to be debited. Okay. So trade expense account debtor to cash account. Decrease in asset, we are crediting cash account, or you can say credit what goes out. Being trade expenses paid. Next, cash received from Ramesh 29,000, discount allowed 500. So again the same thing, what is coming in? Cash is coming in. Cash is a current asset, so we will debit current asset cash account debtor to discount allowed is an expense because we are losing that 500. Okay, so we are treating that as an expense. So all the expenses has to be debited. So it is 29,500, 500 to Ramesh account. So the decrease in debtor. So debtor account, initially we have credited Ramesh, now we have to debit him. Okay, and or you can say debit the giver, sorry, credit the giver. Debit the receiver, credit the giver rules also you can use. But the concept is this: decrease in current asset has to be credited because Ramesh was our debtor, right? Now here what will be the narration? Being cash received from Ramesh in full settlement, discount allowed 500. You can just take back the question and write. It's not that you're framing some different statement. Don't think too much about writing a narration. Just pick up the statement, whatever is given in the question, and you can add a being to it and then write. It's as simple as that. But don't forget writing because that's very important part of your journal entry. Next, goods purchased from Sudhir for 27,000. Purchase account data to Sudhir account. So because it is goods is coming in, we will debit purchase account data. Since it is a credit purchase, we will credit the creditor. Okay, so Sudhir will be a creditor now. Increase in creditor has to be credited. Purchase account data to Sudhir account, 27,000 in the debit, in the credit 27,000. So being goods purchased from Sudhir on credit will be the journal entry. Next, expense paid. What is this expense? Cartridge paid 1,000. So cartridge is an expense. So expense account or cartridge account data, in the debit column you will write 1,000. To cash account you will write in the credit column. So cash is an asset, so decrease in asset has to be credited, being cartridge paid. Next, drawings. Drew cash for personal use 5,000. So drawings, if you see from the business perspective, it is an expense. It is going out of the business, right? So drawings account has to be debited and cash account has to be credited. Okay, because cash is going out, decrease in asset has to be credited. So drawings account data to cash account is the journal entry, being cash withdrawn for personal use. Next, goods used for household purpose. So initially the drawings was in the form of cash, but here it is in the form of goods. Okay, so whenever goods are coming in, you have to use purchase account. So drawings is an expense, drawings account data to purchase account. So 2,000 we will write, being goods withdrawn for household or personal use. Next, cash paid to Sudhir 26,700, discount allowed 300. Now, so Sudhir is our creditor, we have to pay him. Okay, now debit to receiver, we will debit Sudhir account, or we will debit Sudhir account because the creditors are coming down. Okay, the decrease in creditor you have to debit. And what is going out? Cash is going out, or the current account or current asset cash is being reduced. So we are crediting cash account. Here discount received, we have received a discount on prompt payment. Okay, so discount received is an income for us. So income again has to be credited. So analyze, first read the transaction, analyze what all the accounts will be involved, and then think which account has to be debited and credited. Then you will be able to frame the journal entry. So here if you see discount received, earlier what we saw was discount allowed. So here, so there is the receiver, so debit the receiver, credit what goes out, credit all incomes and gains. So if you see, so there will be 27,000. So credit side, it will be whatever we have paid and the discount received. You can say being cash paid to Sudhir in full settlement and discount received. Just try to understand the logic behind how they are framing the journal entry. Please don't try to memorize, because going forward this will not help. Initially this might look easy to memorize because all these are small entries and it will be repetitive, you can memorize. But going forward, if you don't understand the concept behind how journal entries are framed, it will be very difficult. Okay, so practice from now on. The total will be 4,83,200 on both the sides. To check. Next we'll go to problem number 13. So journals in the book of Hema. Hema started a business with cash 1 lakh. So debit cash account. So cash is coming into the business. Increase in asset. To capital account 1 lakh. 1 lakh each side. So business started with cash. Next, opened a bank account with SBI 30,000. So bank account debtor. Now, money has come in the form of cash. Okay, so that cash I am depositing it in the bank. Okay, again bank is also an asset. So money is going from here to there. So there is an increase in bank balance. So increase in bank balance, increase in asset, we are debiting bank account. Here cash, there is a decrease, right? That 30,000 is decreased. So we are crediting cash account. Bank account debtor to cash account. So we will debit bank account and we will credit cash account. Being bank account opened with SBI. Okay. Next, purchased goods from Ashu 20,000. So this is a credit purchase. Why? Name of the seller is mentioned. So we will debit purchase account because goods are coming in. We will debit what comes in to Ashu account. Okay, Ashu is a creditor for us. So we will, any increase in credits, we will credit. Okay. So Ashu account debtor, purchase account debtor to Ashu account. 20,000, 20,000 on the respective column. Next, being goods purchased from Ashu on credit. Yeah, you can mention that. So next transaction will be goods sold to Rahul for cash 15,000. So cash account debtor to sales account. So what is happening here? It's a cash sales. Though name is mentioned, they have mentioned here cash. So forget it if it is Rahul or anybody else. Forget the name. Just focus on the word cash. So we will debit cash account because cash is coming in to sales account because sales is an income. We will write 15,000 in the respective column and you can write it as cash sales. Next, bought goods from Tara for cash. So earlier it was cash sales. Now this is cash purchase. Again they have mentioned the name. Don't confuse when the name is mentioned. The moment you see the word cash, it is cash sales only or cash purchase only. So it is purchase account debtor to cash account 40,000. 40,000. So goods are coming in, cash is going out, debit what comes in, credit what goes out, or you can say increase in asset we will debit, decrease in asset we will credit. So being goods purchased from Tara for cash. Next, December 13, goods sold to Suman 20,000. So here name is mentioned, goods sold to Suman, it is a credit sale. Okay, so it will be debit the receiver, Suman account debtor, or you can say Suman is a debtor. So debtor is an asset, increase in asset we will debit. Okay, to sales account, sales is an income, we are crediting it. Write the respective amount and the narration. Next, received check from Suman 19,500, discount allowed 500, clearly mentioned. So check receipt and settlement. Here whenever you see the word check, you will not use cash account, you will use only bank account because transaction happened via bank. So here if you see Suman has to pay actually 20,000 but Suman is paying only 19,500. So through check. So we will debit bank account because that money will go into your bank balance. Your bank balance will increase. So increase in current asset has to be debited. Here discount allowed is an expenses. We will again debit it. So bank account debtor, discount allowed account debtor to Suman account. We will credit it. Okay. So you can write the narration. Check received from Suman in full settlement. Discount allowed. Next, check given to Ashu on account 10,000. So debit the receiver. We will debit Ashu account. So since it is check, we will credit bank account because we have issued check. My bank balance is going to reduce. So decrease in asset has to be credited. So 10,000, 10,000. being check given to Ashu on account. Next, expenses paid. Rent paid by check. Rent account you will debit because it is an expense. So since it is paid by check, you will credit bank account. Okay, so 2000, rent being paid by check. Next, deposited into bank 16,000. Same. So bank balance is going to increase. So bank will be debited to cash account. My cash balance will decrease. So we will credit that. So 16,000 in the debit column and 16,000 in the credit column being cash deposited into bank. Bank account debtor to cash account will be the journal entry. Next, machine purchased from Parigya 10,000. So it is a machinery purchase. It's a credit purchase. Okay. So machine account debtor, because it is a current asset, we will debit machine account to Parigya account. Okay. Here it's a creditor. Increase in creditor we will credit. So we will write 10,000 both the side being machine purchased from Parigya on credit. Next, expenses paid in cash. So trade expenses account debtor to cash expenses. We will debit trade expense account with the amount 2,000, and since the cash is going out, we will credit 2,000 being trade expenses paid. Next, check issued to Parigya 10,000. Okay, so we are paying Parigya. So debit the receiver, Parigya account debtor, or the Parigya is our creditor. So any decrease in creditor, okay, has to be debited to bank account. Again, bank balance will come down. Decrease in asset has to be credited. So Parigya account debtor to bank account being check issued to Parigya. Next, paid telephone expenses by check 1,200. So telephone expense is an expense. So all the expenses has to be debited. Telephone expenses account debtor to bank account will be your journal entry. So you have to write the respective amount. So you can write the narration. Next, paid salary. Salary is an expense. So they have not mentioned any check here. So you assume that it is a they have made the payment through cash. So salary account debtor to cash account, you debit 4,500, credit 4,500. So you can write being salary paid. So with this we come to the end of the problem. So this will be the total 3,07,000. You can cross check. Now problem number 14 in the books of journal entries in the books of Harpreet Bros. So you have to write the title before starting to write the journal entry. So in whose books are you writing this journal entry? So make sure you write that, and then you can start writing. Here all the journal entries one by one I have given for you to have a better view, but when you are writing it, make sure you give a neat presentation one after the other. First transaction, 1,000 due from Rohit are now bad debts. Now what are bad debts? It's a new term, right? Now Rohit is supposed to pay me or pay my company 1,000, but I realize that he is not going to pay me anymore. Okay, so that amount will be treated as bad debts in my books of accounts. Okay, so bad debts is an expense or loss from my end. I'm not going to get it. Okay, so I will debit bad debts accounts debtor to Rohit account my debtor. Okay, so he is a debtor that's going to decrease. So initially I would have debited Rohit, now I am crediting it and closing. So 1,000 rupees I am not going to get. So being amount due from Rohit written off as bad debts. Next, goods worth 2,000 were used by the proprietor. Now proprietor is the owner of the company, right? So he is using it, which means it is nothing but drawings. So drawings we have to debit, drawings account debtor to purchase account. Okay, it's because it is goods. Drawings account debtor to purchase account, debit, credit. Being goods withdrawn by the proprietor for personal use. You can write that. Next, charge depreciation at 10% per annum for 2 months on machine costing 3000. Now, what is this depreciation? So, if you see any asset you're going to purchase, you're going to use, as and when you're using it, it will have a lifetime, okay? So, as you're using it, the value of the asset will slowly reduce. So, that reduction of value we will charge in the books of accounts as depreciation. Okay, now here the cost of the machine is 10,000 and it will be charged as a certain percentage. Okay, so here they are charging it at 10% per annum straight. So the working will be 30,000 the cost of the machinery into 10%. They are saying you have to charge only for 2 months. Okay, so into 2 by 12. If you do 30,000 into 10 by 12, you will get for 1 month. So that into 2 if you do, you will get for 2 months. So this is the ideal calculation. So which comes up to rupees 500. So we will charge depreciation. Here is an expense. Depreciation account debtor we will debit. To machine account we will credit. Being depreciation charged on machine at 10% per annum for 2 months. Next. Provide interest on capital 1,50,000 at 6% per annum for 9 months. So here the owner has invested the capital, right? So he is expecting an interest out of it. Okay. So interest on capital from the company's perspective is an expense. So we will debit. So before that we will see how much to debit. So here 1,50,000 at 6% per annum. So we will multiply 1,50,000 into 6% for 9 months. So if you divide the answer, you will get for 1 month into 9 will give you for 9 months. So ideally it is 1,50,000 into 6% into 9 by 12, which is coming up to 6,750. So interest on capital, it's going out, it's an expense. So we are debiting it to capital account. So 6,750, 6,750. Being interest on capital provided at 6% per annum for 9 months. Next. Rahul became insolvent, who owed 2,000. A financial dividend of 60 paise in a rupee is received from his estate. Rahul has become insolvent, so he's not going to pay anymore. He's not in a position to pay. He owed us 2,000, but he can a final dividend of 60 paise in a rupee, which means in a rupee he is able to pay only 60 paise, which means 60% of the amount alone he is able to pay. Okay. So he owed us 2,000, so of which 60%, so 0.60 is nothing but 60 divided by 100, 60%. So 1,200 alone he is able to pay. So what happens to the remaining 800? That will be treated as bad debts. He is not going to pay us. Okay. So what are we receiving? What is coming in? Cash is coming in. So cash account debtor, we will debit 1,200. Then bad debts account. So bad debts is an expense. So bad debts account debtor, we will debit 800. To Rahul account, we will credit 2,000. Being 60 paise in a rupee received from Rahul's estate as final dividend, balance written off as bad debts. Okay. So compound entry, you have to calculate the amount and then write. So the total will be 12,250. You can check. The last sum in this video. Cash paid for installation of machine 2,000. So at the time of installation, whatever you are spending will directly go into your machinery account. Okay. So machinery account debtor to cash account. So cash is going out. So we'll credit machinery account we'll credit cash account. So the journal entry will be machine account debtor to cash account with 2,000 in the respective column. So being cash paid for installation of machine capitalized as the part of machine cost. You can see that. Why? Because at the time of purchase, whatever you are spending, you can capitalize it. Next, goods given as charity. So charity is going out of the business. Okay. So nothing but you can treat that a kind of expenses. So charity account debtor to purchase account. So goods are involved, we will credit purchase account. So charity account debtor, debit column you will write 500 to Purchase account you will credit it with 500. Why? Because goods is a current asset. Any decrease in current asset we have to credit, or you can say credit what goes out. You can write the narration. Next, interest charged on capital at 7% per annum when the capital were 70,000. So directly they have not given for any month, so directly per annum you have to charge interest 70,000 into 7%, which is 4,900. So interest on capital is kind of expense from the business perspective. So interest on capital account debtor to capital account, you will debit 4,900 and credit 4,900. Okay. Next, received 1,200 of bad debts written off last year. So what happened? Last year you have written off this 1,200 that you will not be receiving it anymore. So you would have written bad debts account debtor to whoever is the debtor's name, you would have written it off. But now luckily that amount you have receiving it. Okay. So it will be cash account debtor because cash is coming in, to bad debts recovered account. Okay. So because bad debts are recovered, you will write it here. So cash account debtor to bad debts recovered account 1,200 respectively. You can write that narration as being bad debts written off last year is now recovered. Next, loss by fire. Goods destroyed by fire 900. So loss by fire, it's a loss. The name is very clear. So all the losses and expenses has to be debited. So we will debit that, and since goods are involved, we will credit purchase because there is a reduction in the value of goods, which is a asset. So we will credit purchase account. So the journal entry will be loss by fire account debtor to purchase account. So being goods sold destroyed by fire. Next, rent outstanding 1,000. Rent account debtor to outstanding rent account. So what are rent outstanding? So you owe to pay the rent, but you have not yet paid. Okay, your rent is due but you have not yet paid. So here rent is an expense, you are debiting it. Outstanding rent is a liability, okay, which you have not yet paid. So increase in liability you will credit. So rent account debtor to outstanding rent account. So you will debit 1,000 and credit 1,000, being rent outstanding at the end of the year. Next, interest on drawings. Okay. Now this proprietor or owner, whoever is, they are drawing money, okay, from the company they are taking. They are supposed to pay some interest, right? So that interest is nothing but an income to the company. Okay. So drawings account debtor to interest on drawings account. Okay. So we will debit drawings account and we will credit interest on drawings account with 2,000 the amount, being interest charged on drawings. Next, Sudhir Kumar owed 3,000, failed to pay the amount and he pays compensation of 45 paise in a rupee. Yeah. Now, Sudhir Kumar, the same example where we saw 60 paise, here it is only 45 paise, which means he is able to pay only 45% of the amount. So 3,000 into 45%, 1,350 alone he is able to pay. But the rest, it's actually 3,000, right? So 3,000, if you subtract 1,350 from 3,000, the remaining amount is nothing but 1,650 will be treated as bad debts. So what is coming in? Cash is coming in 1,350. So bad debts account debtor. So bad debts is an expense, or you can say loss. So that is again debited. Cash account debtor, bad debts account debtor to Sudhir Kumar account. Sudhir Kumar, we will close this account by crediting with 3,000. Okay, so you can give a narration. Being 45 paise in a rupee received as compensation from Sudhir Kumar, balance written off as bad debts. Yeah. Commission received in advance. So commission received in advance. So this is a you can say any payment that is received in advance before you actually execute it, that will be treated as a liability. Okay, so any increase in liability has to be debited, or you can say the income has to be debited. So hence the entry will be commission account data to commission received in advance account. Okay, being commission received in advance for the next year. So you can write the amount. Yeah, the total 22,500. So with this we have come to the end of the video. If you have any doubts, do let me know in the comment section. The same video is also available with Tamil explanation, and the link will be given in the description. So if you want to know how the journal entries are framed, there is one more video which talks about how the journal entries are framed. That link will also be given in the description. You can check for the same. So if you like the video, share it with your friends, subscribe the channel. See you in the next part. Until then, bye bye.